In this video, I'll explain the concept of Dutch versus non-Dutch interest. I'll also explain why Dutch interest is a safer option, and cases where Dutch interest is required for rehab or construction loans and private mortgages, also known as hard money loans or bridge loans. The meaning of Dutch interest is you, the real estate investor, pay interest on the entire loan amount and not only on the disbursed funds for rehab or construction loan. Some lenders use the term full boat interest, but Dutch interest is a more common term. When using private financing or hard money for a fix and flip or ground-up construction project, the lender typically releases the funds for the project in multiple phases. With Dutch interest, you end up paying interest on funds which you don't yet have access to. Lenders can justify this if the funds have been allocated to you and can't be used for other loans they wish to fund. If the loan is non-Dutch interest, you only pay interest on the funds which have been disbursed. Non-Dutch interest is also known as disbursed interest. From the information I have, the majority of rehab and construction private mortgage loans today are non-Dutch. Since it saves investors money on interest costs, it's obviously the preferred structure, and most lenders offer this to stay competitive. The non-Dutch interest structure can be a challenge for lenders in cases where the rehab funds are never used. Let's say a lender includes a $100,000 rehab budget in your loan, and you later decide that you want to use your own funds to self-fund the rehab costs just to have more control. If the lender had set aside the funds for your rehab budget, but you never used them, that could end up being a loss for the lender since that money is not being put to work and not earning interest. I know one lender that recently stopped offering non-Dutch interest because they incurred too many losses with this exact scenario. Obviously, most real estate investors would choose the non-Dutch interest option to save money on interest expenses, but there is a case to be made as to why Dutch interest is safer for the real estate investor. With Dutch interest loans, many lenders use a third-party fund control company to manage the rehab or construction project after funding. Upon closing the loan, the lender will transfer your project's funds into an escrow account, and after you complete each phase of your project, the fund control company will handle the on-site inspection to confirm that the work was completed, and then they'll transfer the funds from escrow to your bank account. Since the money is in an escrow account, you'll have assurance that the funds are available to you when you need it. I'm not saying that there's a high risk that your funds won't be available with a non-Dutch interest loan, and I believe the risk is extremely low. I have only heard about a handful of cases where a lender did not have the money to fund a draw. That said, the reality is most lenders do not set aside your rehab funds. Most lenders are using that money to fund other loans, and it's not something to be too concerned about since professional lenders always have access to capital when needed. Most lenders are well capitalized and good at managing their liquidity, and many of them have a bank line to help with cash management. If they lend out all of their cash on hand, they could tap the line of credit to fund your draw and then pay down the line once loans are paid off. If necessary, they can also sell their loans to other lenders. In 2023, I heard that a large debt fund wasn't able to fund construction draws for their borrowers, but I don't know the reason or the whole story. I also heard about a lender in Southern California that could not fund draws because the fund managers were allegedly running a Ponzi scheme and taking money out of the fund for their own personal use. So their fund investors and their borrowers were both getting screwed. These are just two examples of cases where real estate investors could not get the funds to complete their projects. I'm sure there are more, but again, this is very rare in private lending. In California, using a third-party fund control and escrow is required for lenders or brokers funding loans under a California Department of Real Estate license, so these loans are always Dutch interest. This legal requirement means that the real estate investor bears a higher expense with financing costs, but the law's intention is to protect investors and ensure that their project funds are secure and available when needed. Some lenders use the CFL license instead of a DRE license. The California Financing Law License, issued by the Department of Financial Protection and Innovation, does not require lenders to escrow funds for rehab or construction projects. I know of many private lending companies in California that have both licenses. If you have concerns about the funds being available to you for a rehab or construction project, you may be able to negotiate with your lender to use a third-party fund control service. When your loan is non-Dutch interest, this may be an odd request to the lender and likely won't make sense. However, if your loan is Dutch interest and the lender is not using a third-party escrow, that's definitely something you want to address. because in this scenario, the lender is charging you interest on your project funds while lending out those funds to other real estate investors and earning additional interest. Most private lending companies that offer non-Dutch interest will promote it on their websites and other marketing. Some don't even mention it because it's so common for rehab or construction loans to be non-Dutch. If you use privatelenderlink.com to search for lenders, it's very easy to find out if their loans are Dutch or non-Dutch. Once you've selected a loan type and state, you'll end up on a search results page with a list of lenders. View each lender's profile where you'll find lots of information about their guidelines. Scroll down the page a bit until you get to the Rehab Value Add or Construction Loans section. You'll see a field labeled Interest Charged for Renovation Costs. The answer here is not explicitly Dutch versus non-Dutch, but entire amount of total project cost means Dutch, and only on funds drawn means non-Dutch. You can contact each lender directly, or if you'd like some recommendations, click the Create a Loan Request button. Provide some information about your deal for us to review, and we'll invite a few select lenders to look at it.